In a scale of 1 to 10, 10 being absolutely definitely happening, 1 being it won't happen, where would you rate the chances of a meltdown in 2012 in Europe?
So 10 is definitely not happening?
10 is definitely going to happen, and
10.
1, it definitely won't happen.
All right.
I hope that's the right way around.
All right.
Well,
we'll work on that. 10
right,
is
10
definitely...
10 definitely going to happen. Meltdown.
I think it's probably a 3 or a 4. So there's the risk there, but I think that self-interest will ensure that the euro stays together.
Right.
I think the Europeans will work out the situation. That the European Central Bank will continue to pump enough liquidity into the system. They'll keep interest rates super low. They'll do what it takes to be able to keep everything together. So we're not of the view of gloom and doom, sort of scenario. We don't think it's sort of 7, 8, 9 chance. Sort of more like sort of 3 and 4. You can't rule it out, but believe that they're going to hold things together.
So the rates, let's say they are held until February. Do you think the November rate cut has made a difference, or is it too early to say?
It's made a difference in terms of confidence levels. So people say rates aren't going up.
Up, that's exactly, yeah.
Rates aren't going up. They have come down by 1/4%. That's probably just enough nowadays for people's high electricity bills or council rates. So you've met some of that cost, but people aren't in front yet. And there's still a lot of uncertainty about what's happening in other parts of the world. So they've improved things to some extent, but they're not stimulating our economy. They're not. If you cut another 1/4%, then we've got the cash rate more at normal sorts of levels. And I think that would be giving the economy a bit of a kick along.
Right, now let's talk property. Tell me about your take on the Australian property market, specifically.
I think we've got a better balance between supply and demand. And I suppose we need to think back of what's happened over the last couple of years. We had the global financial crisis, we had interest rates slashed, we had grants to first home buyers, that supported the housing market, and we had more units and homes and townhouses created, so more building happened. So we had more supply on the market, and that's been coming through over the last 12 months or so. But demand, well, that was brought forward. That's been choked off a bit. So I think we've got a bit more up in terms of supply, demand's come down. And because of that situation, we've got a degree of consolidation in terms of home prices. So they were going gangbusters, 2008, 2009, early parts of 2010, but we've had the correction we had to have over the last year or so. I think people always need to look back over the last 5 or 7 years with property. And here in Adelaide, prices have risen by, on average, around about 7% a year over the last 5 years, which is a pretty reasonable outcome. Yeah. I don't think people should work on the principle of that's going to continue to happen, because really I think sort of home prices should be rising in line with household incomes going forward. And I think that's probably going to see a recovery in home prices over the next 12 months, but probably only 1, 2, 3%, not shooting the lights out.
So 2012, let's talk South Australia. We're at 5.2%, I think, reduction in the median price compared to, we're sort of middle stream really. Canberra and Sydney doing much better than us, and Brisbane doing worse. What are your thoughts about from now, like basically the end of 2011 through the whole of 2012? We're talking this time next year. What's your prediction?
Something like 3% growth.
3% growth.
Yeah, 3% growth. I think we're going to see the prices have now come down, and I think a modest increase over the next 12 months, and you'll see 2 or 3% higher than what we are at present. And then I think once you average it out again over the last 5, 6, 7 years, you're going to see growth in home prices, 4 or 5%, and you'd have to say, okay, that's a reasonable outcome. It's matching growth in incomes, and it's the sort of situation that you want to see. Clearly, sort of here in Adelaide, you're not seeing massive developments where and homes are empty,
There's no oversupply at all.
No, you've got a very tight rental market still. So you think about the influences. Unemployment's low. You've got interest rates which have come down. You haven't got an oversupply of property, and you've got a tight rental market. Well, you add all those factors up, and it does look as though we are going to see growth in terms of the housing market.
Anecdotally, a lot of people I know in business have been shedding staff. Are you noticing that? Will that flow through to higher unemployment levels? I mean, we're very low at the moment, so it can probably handle a bit, but what are your thoughts?
What we're seeing more broadly is that people aren't shedding staff. They're not doing a lot of new hiring though.
Right.
So they're holding numbers pretty steady. Perhaps there's a degree of natural attrition, so people will retire and the like, and they may not be replaced. But it's the focus on hours work now rather than anything else. And it may be that in the short term, people's hours are being bumped up a little bit, a bit of overtime to be able to handle things, but we're not taking on new staff to be able to meet any higher demand.
Now, just on affordability, it was a big issue when we were in the boom, and now there's reports coming through this week that with the lowering cost of finance, the real increase in wages, and the median prices dropping, the whole dynamics have changed, and now we're in a situation where there's been a return to affordability. That must surely impact positively on a property market.
Oh, very much so, very much so. And I think people are starting to realise the true situation with affordability. In the past, and you go back years ago, people think that you need to compare capital city house prices with incomes right the way across Australia. Well, clearly you're not comparing apples with apples. You need to compare all home prices across Australia with all incomes across Australia. That's what RP Data and RISMark have done, and show that basically housing affordability has been trending more sideways rather than anything else. But over the last couple of months, you're right, home prices have come down, interest rates have come down. That means affordability is improving at present, and it's less of a factor, I think, now for people to think about. People are realising too that you need to focus on incomes, and incomes are rising. Property prices are coming down. Both those together mean sort of stronger demand.
Now, there was a lot of talk about this massive shortfall of supply. This was back 18 months ago, and we're not seeing big developments going ahead, so they've been stalled. I would have thought in South Australia we're going to see a flashpoint where there's an undersupply that will become really evident. So rents presumably might rise, and property prices, if all of the European woes are in play. On our side, we've got capital projects with the start-up of the Southern Freeway, the light rail, the Bowden development, the football oval, the Torrens upgrade. Now, my view is that those two could be in balance next year, where with the stimulus of all of the local mining and big projects, and the confidence killer of Europe. Your thoughts on that theory?
Well, certainly, so there's a lot to be positive about, sort of here in South Australia. There's a lot of developments which lie ahead. Hopefully we also get BHP Billiton, sort of go ahead with, sort of Olympic Dam. We've got all the exploration activity in terms of the mining sector. So the job market looks as though it's going to remain pretty healthy. Currently, unemployment rates in the low fives. Historically, that's very, very low levels. And that's a challenge, sort of businesses got to look to be able to hold on to their good staff, sort of going forward. So I think that's going to support the economy over the next 12 months and more than offsets, certainly the negativity that we're seeing abroad. Okay.
Now, just to wrap it up, let's just look at some crystal ball gazing. And so you own a property here in South Australia now, Craig, and you are thinking of whether to invest more into the state or whether to sell it and rent and buy later. What would you be telling your family members? It's a question I think I asked you last time. What would you be saying to your family members? What would you do yourself? Would you buy more, sell and buy rental properties? Would you invest in Whyalla? Would you invest down the Fleurieu? Buy big home, small home? Where do you think the money should go for the best chance of future gains?
Well, we're a big believer in that the demographics have changed somewhat. The generational effect, it's the Gen Y effect, and you've got to think about people who are moving into the housing market now, and they're people in their 20s, perhaps early 30s. Their desire for property now is very much close to the workplace or close to cafes, entertainment areas and the like. This is the trend that we're seeing right the way across Australia. There's less demand for big homes on the outskirts of property, less in terms of travel time. People want to be closer in. So I think it's looking very much at developments closer in to Adelaide. Good proximity to the city, good proximity to cafes and restaurants. But of course, it's always a case of doing your homework. You've got to look at the area that you're looking in and seeing whether there is any major new developments coming on. What's the supply situation like? Do your homework in terms of the unemployment rate, the demand moving into that as well. So I think it's a case that in the current environment, given that home prices aren't shooting the lights out, there's more supply on the market. The people have got to do their homework, even more scrupulously than they've done in the past. But I think it is that Gen Y effect, that generational effect, where people wanting to live closer into capital city centres.
So, I'm going to pin you down on this. So, are you over Christmas dinner or over the New Year's celebrations saying to people, I think we should be buying now? Or would you be in shares? Or, what do you do? You've got some spare cash. You don't want to be sitting on your hands forever. You're sick of doing nothing. What would you be doing?
All right, now if I had money, of course my money is still going into education.
Right.
So that's education is still very much
and
the focus. Well, yes, it's not a lot that I've got to spend on that though, so that's quite good. But in terms of my money, it's still very much in terms of education. But I think it is in terms of, at the moment shares are undervalued. And property has got good prospects as well. So, if you had the dollars to be able to put a little bit of money in both, I think that's pretty much the case. I think in terms of property, the prospects are there for very much in terms of the longer term. You just got to do your homework, a little bit harder. But I would be thinking about property. I think everyone's got to think about their own portfolios though. How much property they've already got. If they've got a couple of places, all right, let them ride and then put their money into the share market, which does look as though it's got better times ahead. But I suppose I would be looking at property from my own point of view. I've got enough money invested in terms of the market and superannuation and the like. So had good results in terms of the current place that I own in Brisbane, and I'd probably be looking at some other city, so whether it's South Australia, whether it's Perth,
okay.
Not probably the Victorian market, because I think in terms of supply demand, they're going to have a lot more supply coming on, and that's going to reduce perhaps provide opportunities down the track in terms of pushing down prices. But places like Perth has already been pushed down. Adelaide's probably been pushed down, a little bit too far as well. That provides some opportunities. Sydney market's looking, okay as well. Why? Because it didn't have, the substantial increase in prices when other capital cities did, a couple of years ago.
That's right. Yep. And now, just a couple of observations I'd like to test against your theory. We're finding that in our world, TOOP+TOOP, we're selling a lot of big homes quite easily. Not necessarily for massive prices, but they're selling really, really easily. Is that because your medicos and the people with incomes have not changed are finding perhaps a bit more affordable and they want to put money into something safe like their own home? What's the theory? Is there a theory? Could you answer from a theoretical point of view why that's happening?
It's very hard from a general point of level because, housing is very much in terms of supply, demand. Very much in terms of what's happening in the local area, what prices have done over the time. So I think people are very much focused on security now. We do know in terms of people's perceptions that putting their money in the bank is considered a very good investment at the moment, because people are worried about the future. They're worried about losing their capital base. And I think still people are of the belief that they put their money into property, it's going to hold up in terms of retaining their capital value than perhaps in terms of other asset classes. So I think that's probably it. I think the fact that people's risk preferences have changed, and they are looking very much at safety, security and the like rather than anything else.
Great. Now to finish up on 3 Craig James gems for Adelaide people in residential property, 3 great words of wisdom for 2012.
Yes, well, I think it's always remember the big picture. So don't get too focused in terms of what you see on day-to-day type movements. Always remember the big picture. Always think about the longer term. When you're thinking about property, don't just think about what's happening over the next 3 months, 6 months, 12 months. Think about it in terms of a longer term aspect. When you're thinking about your own financial position, think about it in terms of diversification, because at the end of the day you want to be able to sleep well at night. And I think too, when you're thinking about your investments, think about the total return on your investments. It's not just about the capital appreciation, but it's about the returns that you're generating. Now in property, it's the rent. It's about making sure that you've got a good tenant in there, and so you maintain that good tenant over a long period of time. And that may be that so you don't push up rent so significantly, so you can maintain that return going through. So always remember the bigger picture. Particularly in terms of property, people are focused very much on the property price. When you're an investor, you've got to be thinking about security of your tenant, and also the return that you're going to get over time.
And in 2012, when we get to December of 2012, we will be happy or sad?
I think we're going to be happy. I mean, I think Australians really, you haven't got too much to complain about. When you go back and you think about all that we've got here in Australia, you could be a whole range of other parts of the world. Once you think about that, you say, well, no, I think we've got it pretty good here in Australia.
Craig James, thank you very much for your time. It's been absolutely sensational.
And thank you.
Now, for those of you that have been watching today, that's straight from the man himself. He's one of the leading, foremost economists in the country, and we've got it firsthand. Nothing to worry about next year, so just get amongst it and start enjoying yourselves and stop getting caught up in all this world stuff, and let's here in Adelaide just have a good year. So all the best for property, and we'll see you again shortly.